Okay, welcome everyone to the American Club of Hamburg, back on Zoom. Tonight we have an interesting speaker that's going to tell us about Bitcoin and blockchain technologies and how it's applied to financial currencies and other areas. Moritz Schildt has worked as a strategy consultant in the financial services and has spent many years in executive roles, CFO and CEO with financial service providers. In 2009, he founded nordIX AG, and in 2017, he founded coinIX GmbH Co. KGaA, a listed entity which invests in digital assets and blockchain projects. He's also co-founder and board member of the Hanseatic Blockchain Institute. He holds degrees in law and economics from Hamburg University, as well as an MBA degree from INSEAD. Moritz is going to speak for approximately 30 minutes, and then upon conclusion, open the floor to some questions. So everybody join me in welcoming Moritz Schildt. Thank you, Moritz, for coming.
Yes. Hi, everybody. David, thank you very much. Björn, thanks for inviting me, because he was the one to connect us. And it's a great pleasure to giving us a short intro to what I would describe as part of a hobby I jumped in a few years ago, and since then I continued to dig deeper into this blockchain crypto space, and I believe it's quite fascinating. I'm always learning more and more, and even though it's not yet something that everybody is really aware of, I personally am a strong believer that this is a technology that has the potential to significantly change, if not even disrupt, not only financial services, but many other aspects of our day-to-day life and economics. That's maybe as a short introduction to the theme, and then let me try to briefly share my screen. So we have some 30-something minutes, and I need to focus on certain areas I feel personally are the most interesting ones. And I think everybody, if you have heard about Bitcoin and its potential in terms of price and volatility and so on, tentatively, I would like to focus a little bit more on the underlying technology, which is the blockchain technology, but we'll come to it in a second. So just as an initial view on that, so cryptocurrencies, if you want to understand them, you really have to be aware that you are at a point where complicated things about money have to be combined with complicated things about computers. And so I fully understand that quite some people tend to say, I've heard about it, I think it's interesting, but I need some time to really dig into it at some point in time. And when you hear about blockchain, you might possibly be not aware that this is something that is already applied. And in Andorra, for example, students get their diplomas no more in a physical way, but on a blockchain-based database. And in California, it's said that researchers in medical science use blockchain systems for their clinical data. And in South Korea, the Post uses blockchain to optimize their careers. And in Switzerland, in Wallenstadt, there is a possibility for you, if you have a solar panel on your roof, to sell the electricity via a blockchain-based exchange for energy. And eventually in Bahrain, which is not really known for being modern and open to new developments, they created a sandbox area for blockchain companies, permitting them to develop new ideas. And that gives you a flavor of this not being a technology, but something that has the potential to really spread globally over the world. I think you gave a short introduction to me. Thank you very much. I don't have to repeat that. And maybe we switch to blockchain and try to give you a flavor of what it is about. All this started by a white paper. And from the very beginning, I heard about a white paper about Bitcoin, and I never looked at it because I felt this is presumably a very complex mathematical IT-related document. And in fact, it's a 8-page plain language document that's essentially saying, and that happened in 2009. So the idea of creating Bitcoin was established by this person with the pseudonym Satoshi Nakamoto after the financial crisis. And he felt that it would be a good time to develop an IT-based solution which would permit the transfer of value from one individual to another individual without having an intermediary, and particularly without having a bank in between. And so he created a theoretical framework of what's marked here, a peer-to-peer network that does not need a trusted third party. And that's the core of this entire idea. And that was the beginning of, well, Bitcoin, which essentially is the first product that has been created in this blockchain. And I think everybody has heard of Bitcoin, that has really rallied in terms of prices. It's not absolutely up to date, but we have this shows the market cap, which is pretty large. On the left-hand side, you see how much the value of Bitcoin has appreciated in 2020, and 2021 is quite of similar. However, FTSE was more positive. And people tend to compare cryptocurrencies, particularly Bitcoin, with gold as an alternative to traditional investments. And one thing I personally find even more impressive than the value creation is the fact that this Bitcoin is not a company. They don't have a management. They don't have a marketing budget. Everything that has been created in terms of value, but as well in terms of public awareness on Bitcoin, is something that's purely based on a community. It's the spread of words, and people have told other people, and then they said, okay, I'll tell my friends, and then the press, of course, took it, but there is no company behind it. And that's amazing that within 12 years by now, an idea that has been created by someone writing an 8-page document has more or less become something the entire world is aware of. And then, nonetheless, I would like to put your attention on the fact that Bitcoin is only one single product, and The Economist has quite early adapted this idea and started even on the front page to talk about the trust machine, this technology that is driving, that is doing Bitcoin. And I would like you to join me to try to understand a little bit better in detail what exactly blockchain is. And there are many, many approaches to that. Many of them are quite technical. And I like this one because I have stolen this chart from JP Morgan. And essentially JP Morgan is saying, well, blockchain is a database. And I'm sorry that the next slide is in German language, and I'll help you to, we'll walk you through this, because this is the core of what blockchain is about. Blockchain is a revolutionary new and different methodology on how we store data. And on the left-hand side, you have the traditional way. This is centralized databases, whereas there is a central operator, and it is the central operator who ensures that data is in a confidential way treated, and that's secure and no one external has access to it. And it's the central operator of the database who is in the position to change data, to forward data, to update data, or to delete data. However, if and as long as it is a trusted operator, then, and this is a traditional way we look at it, then we hopefully can believe that our data is secure. And on the other hand side, a blockchain-based way to store data, there is no central operator. And the question of confidentiality is taken care by cryptographic methodology. And then, because all data is encrypted, we don't have a single operator of the database. We can take copies of this data with a large number of users who cooperate, and by doing this, ensure that the data cannot be manipulated. And this is something people are sometimes a little bit have difficulties to really understand. And that's the reason why I tend to demonstrate it in a way where you can just touch it. And I brought an example for that. This case, I'm not sure if you can see it. A cool camera, if I...
Yeah, that's fine, we can see it.
So this is a traditional form of storing data. It's in a closed box. It's hidden to the public. It's not transparent. You can't see it. I'm the operator, so I'm the trustworthy person to take care of it. And in this kind of traditional database, you might find confidential data, such as this is the case. I don't know if you can see it. This is a statement of account of David Seller, for example. And of course, you don't want to have your statement of account to be shared by everybody, and you prefer that someone stores it in a way that's not transparent and someone takes care about like I do. The new idea of storing data is encrypting the data. So instead of a statement of account, which would show the name of the bank and the name of the owner of the bank account, we would put it in something that looks like this. So that's new to me. I have to figure out if you can see that. So this is an encrypted set of data, which has two informations. It has a timestamp, so it's a date, and it has an amount. All other information is encrypted. So assume that everybody, all of us, would take our statements of accounts, bank account, with us. However, all information on that would permit to figure out who is the owner of that account is eliminated or encrypted. So essentially, we would just have the date and the balance. Tentatively, we would say, all right, as long as no one knows which account is mine, which belongs to me, I don't mind sharing this data. And this is the first part of blockchain, to say if data that would normally be confidential is encrypted in a way that it's impossible to relate the information to an owner, to an individual, like this data set, then we could easily take copies of that data and spread it all over the world. Everybody could have a copy of that because I'm the only one who can decrypt it and tell which statement of account that's. So the first step is let's encrypt the data, and then comes something which gives the name blockchain, because this data and assume that all individuals that are part of the Bitcoin blockchain, for example, they have these statements of accounts. And every 10 minutes, you have lots of new information because there are transactions on these Bitcoins. And the idea is that everybody who wants to be part of the system creates blocks. In my example, let me get the camera closer to me. In my example, I use these transparent plastic boxes, and a block is built by just putting a number of statements of accounts or of transactions together in a kind of block. And now the next smart thing about blockchain is that it is a way to store data in a way that cannot be manipulated. And in order to do so, we use something that's called hashing. Hash is something like the digital fingerprint. You might want to compare it to the, I don't know the English expression for Quersumme, but if you add 1, 2, and 5 from 1, then you get 8. And if you change one of the digits in the initial number, then the result is changed. And that is somehow the way hashing works. And hash essentially means that we calculate a hash value out of the entire data in this block. And I've done it. This is the result, which is a hash value. Hash values look like this. And you use a hash to somehow seal this block. And the underlying idea is that not only one out of us, because you can take multiple copies of all these statements of accounts that are in there. And so someone, for example, Bruce gets a copy of that, and Björn holds a copy of that, and David as well. And the smart thing is that as long as the data that is in the respective box is identical, all the hash value is identical. And then it's about blockchain, and it's not too hard to imagine that the ultimate idea is not having a single block, but a number of blocks that are connected with each other by these hash values. And everybody who's part of this blockchain system, who's running a node, will be able to compare if his set of data, his copy of the blockchain data has the integrity and is not manipulated, because all these holders of blockchain nodes are connected to each other, and therefore they continuously compare who has the right hash value. And that's the smart underlying idea. So we first of all change the content of the data by encrypting it, and then secondly we distribute it to everybody who would like to have a copy, asking them to apply the same protocol on how we store the data. And if everybody uses the same protocol, we can ensure that many people can confirm that the data everybody holds is the same, and it can't be altered. It can't even be deleted without changing the hash value. To illustrate that a little, let me come back to my presentation. One sec. And what I initially wanted to show you is that I bought my first Bitcoin back in 2013. So it was new to the space. I've heard about it. I found it quite compelling, and I thought, so let's try to figure out how it works. And I bought on the 18th of July 2013 a quarter of a Bitcoin on eBay, because I was not aware of exchanges and so on. And well, you might trust me that this is true or not, because of course this could be photoshopped. And the smart thing about blockchain is that each and every transaction that ever has happened with Bitcoin is stored in the blockchain, in a database that is not held by a single individual in one single place, but is stored in multiple places that have a similar protocol to ensure that the data is not corrupt. And what you can see on the right-hand side is the Bitcoin transaction, and there's a QR code, and you can look into it. And when you look at it, you go to the internet and you use a browser, but with the browser you don't see a page. You see data directly on the blockchain. So you use the browser as a means to enter the blockchain data. And in this particular case, this is my transaction. I got this 0.2499 because there was a fee of 0.0001 Bitcoin. And that happened, I took this screenshot some time ago. But all of you, if you like, you can look at it and you can see in the upper right corner, I don't know whether that's seeable on your screens, that this transaction I did has been confirmed by 396,000 other parts of the Bitcoin network. All of them have seen this transaction and they confirm that in their data set, it is true that at this particular date and time, a transfer has taken place from a wallet address, which you can see down here, to another wallet address. And that's the underlying idea, to create a protocol which stores data in a way that a community of people taking part is able to verify if the data is correct. And let me try to illustrate what this can do for us if it's not only about moving Bitcoin or cryptocurrencies. What we quite often see is this on the left-hand side. We have users and we have providers of something, and we have someone in the middle, the central intermediary. And you see this structure on many services, be it booking.com, be it Google, be it Facebook, be it a central bank, a commercial bank, the trade register, and so on. And let's take booking.com as an example. And many people usually tell me, well, it's convenient because many hotels offer their free hotel rooms, and every user who's looking for a hotel room has only one single place where he can look for potential rooms. And people tend to tell me it's so convenient because the machine, the booking, will remember me, and they will know that I prefer a bath tube to a shower, and so I don't have to enter it any time. And when I tell them, but are you aware that last time when you were looking for a hotel room in Frankfurt and there was a trade fair, and therefore the prices of hotel rooms were at 550 euro, it only took you 8 milliseconds to decide, I take it. And people tend to say, so yes, do they really store this information about me? I have to say, yes, of course. That's much more important to know your price sensitivity than caring if you prefer bath tube to a shower. And more these intermediaries in the middle pile up a significant number of data, which is the most relevant part of their business model. And I think I don't have to tell you about Google and so on. And that is the core where blockchain comes in, because blockchain is the technology that would permit, first of all, that even value, not only the information there's a free hotel room available, but as well the information of even buying the hotel room can be performed peer-to-peer, directly between the parties. And there is no central intermediary needed to ensure that the transaction is proper and so on. And as you can see on this small picture as well, everybody can have a copy of the data, even though the personal data is encrypted. So only the ones who really need to know what's the name of that particular person will be able to have access to it. Everything else is shared, however, in an encrypted way. And that's, from my point of view, one of the main reasons why this blockchain-based things has a high likelihood of striking out all these businesses with a central intermediator, who usually is used to create trust. And this is illustrating a trend which I think is all over out there. However, it currently lacks the technology to permit that people get rid of the central intermediate. And look at this easy example. You may, when you're from the US, you might have something similar. In Germany, people tend to have in their cars a copy of that, what you see on the left, the Michelin, this booklet, which explains to you which are the restaurants that are recommended. And it's a central instance that someone telling you this is good and this is bad. And people tend to get rid of these central instances that tell them what's good and what's bad, and prefer to rely on the community, on other people that have the same experience. And one of the quite relevant events for me to understand this trend towards decentralization instead of something credible or obviously credible or said to be credible is when this small company coinIX registered with one of the large crypto exchanges, and to do the onboarding. You have this typical documents of please give me a copy of the ID of the managing director and the trade register and so on. And they were asking to provide a link to the LinkedIn profile of the managing director. And I said to the person on the phone, so why do you need the LinkedIn profile? And the answer was, well, an ID can be falsified. And that was it. Meaning they use the profile on LinkedIn and they tend to believe that the trustworthiness of a LinkedIn profile where you have some 200, 300, 400 people demonstrating, I know this guy, we went to school together, we went to university together, I worked with this person, might be more trustworthy than a copy of a document, even though it's governmental issued. And that's something that, from my point of view, really has huge potential if we start to use information that is confirmed by a number of individuals to be stronger than the information that has a stamp on it. Let me just take this easy example of a stamp. So I think one of the main disruptive areas for blockchain technology is particularly this: get rid of the central intermediary, get rid of documents that have a stamp, and trust in something that is data which is in the public domain and that is guaranteed by individuals, by people that are part of a community. And then to just give you a flavor of other potential use cases of blockchain technology, what we see quite often in different areas is that people use data and that people interact, and the data is stored with different providers, with different, for example, in logistics. And you have someone who is doing the shipping and someone who is doing the train logistics. And all of these are using different formats to store the data, and they don't communicate with each other. Blockchain provides a standardized methodology for the storage of data, with the underlying idea that everybody can have access to all the data. By this, you ensure that data is not manipulated, it can be trusted, And because we can build pretty easy interfaces into this data, everybody can write and read from this common database. And that's something we currently see, for example, in transport and logistics. IBM has been building a huge project which essentially works the way, as you see on the right-hand side, that we define a common protocol how to store data. We use the blockchain technology because everybody can get a copy of this data, and all this helps to ease and to reduce significantly cost and creates time. One of the areas where this technology has huge potential as well is the health sector. In Germany, there has been a discussion about the Gesundheitsakte, so the personal health file, around for more than 10 years, I would say. And for quite a while, and was not solved, people were discussing who is the right place to be the operator of a database which would hold all health data for all German citizens. And of course, it was the health insurance offering that, and then it was the Ministry of Health offering that, and of course the Association of Medical Professionals was offering that. And ultimately, the patients' organization said, no, the only way, I mean, it's relevant, it's good, and it's important that you have all your medical data at one single place in a digital format. And currently, the one doctor has a copy of your X-ray screen of your left hand, and another doctor holds copy of the X-ray of your teeth or whatever. And this is because there is no data solution for that. Blockchain offers you the opportunity to have a place where all this data is stored, where you don't have a central operator who has access to the data, but it's only you, the patient itself, who has the key to decrypt that. And I can very well imagine that at some point in time in the morning, you get an information from your Alexa saying, don't forget that you have an appointment with your dentist at 2 o'clock. You say, yes, thank you. And then Alexa will tell you, do you want me to provide the new dentist with all information from your last dental surgery by opening this particular part of your health file? And I say, yes, please. And he gets access to only what he needs to have. And if I decide to switch the dentist, then the information is no more available to him. And that's the underlying idea. I mean, of course, all this information is relevant for you if at some point in time you wake up and you feel blank steel beneath you, and you have a large light and someone looks in your eyes and says, do you take any medicine currently? You can just by a finger click give people access to your entire health information, because it's stored, first of all, not in a place that can be destroyed, where someone else can delete that, where you have to pay for it, where the electricity can be down. The data is stored in a way that's replicated multiple times. And so it's immutable. And it cannot be deleted, it cannot be manipulated. Everybody can have control for that. And only the individual who initially gave the data or made the data available is the one who can give access to that. That's essentially what I wanted to give you as some initial thoughts and give you an idea of what this blockchain is all about. I think I have one final file just to give you an idea what we do at this coinIX company. coinIX, I think you mentioned that earlier, David, started back in 2017, do investments in cryptocurrencies and doing venture capital kind of investments in blockchain startups. And we by now have made investment in more than 20 coins. So we started with Bitcoins, but there are many more. We invested in equity in some companies, mainly Germany, Austria, but we have good contacts to the US as well. These are companies that are developing blockchain-based applications. They do tokenization of estate and other assets, for example, and apply this in different areas. And then what for me is one of the most interesting part of it from an investment point of view, it's on the right-hand side, the token projects. These are investment opportunities that you can't buy on a crypto exchange, but more and more young startups tend to say, we are not looking for venture capital, we are not open for investors that want to have a share in our company, but we want to build something by creating our own token. This token will have a use case attached to it, we will have a value attached to it, and we invite potential investors to become early investors in a private sale, for example, of such a token issuance. And amongst these there are many quite cool projects. One of these projects, which was the most successful we invested in to date, is the Graph. The Graph, for those of you who are into this cryptocurrency area, is a project that started about a year ago. We bought a bunch of the token in a legal construction that is called a SAFT. SAFT stands for Simple Agreement for Future Token. So you just pay money and you sign a contract, and the only thing you get in exchange is the promise that at some point in time there will be a token and you get transfer of this token. And then later on, if you're lucky, the token might be listed on a crypto exchange. There are by now thousands of crypto exchanges all over the world, and it gets tradable and it gets a price tag attached to it. In this particular case, with this project called the Graph, we were lucky that our initial investment, which was 50,000 euro, ended up in a total valuation, which end of or beginning of this year was at 5 million, and now the total investment is 15 million. So from an investment point of view, which I don't want to put into the kind of front row today, this is an area, crypto is a pretty interesting area, which extremely high risk with extremely high volatility, but sometimes if you're lucky to find the right projects, with extraordinary returns. Yes, that's essentially what I wanted to share with you. If you want to go over to Q&A, that would be fine with me. I could have a few more slides on crypto as an investment. I don't know if that's in your focus or interesting for you, or if you should start with the discussion and maybe come to that later on.
Thanks, Moritz. Thanks so much for giving us an overview of blockchain. I think maybe we'll, if anybody has questions, send me in the chat so that I know I can call on you. In the meantime, there are a couple of things that came to mind to me while you were speaking. We just read, the crypto is such a big area, and it feels like it's still such the early stages. I mean, in Los Angeles, where the Lakers play at the Staples Center, I think the last time they had naming rights, Staples paid for 10 years, they paid 100 million. And just this week, crypto.com just paid 700 million for the naming rights for the next 20 years. So a huge investment. Also, I was reading today that Quentin Tarantino, he's trying to have a non-fungible token for the Pulp Fiction film.
No, yeah. My understanding, which I think is pretty smart. So the non-fungible token is the idea of having something, maybe a piece of art, which is in a digital format, and you can attribute it to someone. So you still can take copies of that, but you can clearly identify this is kind of mine. And what Quentin Tarantino, from what I heard, is offering to take all the parts of the films that are not public. So these parts that were cut
Oh,
out.
like cut scenes, I think.
The cut scenes.
Okay.
And the fans, of course, are very, very keen to see what had happened if the camera would still have run and so on. And to sell these piece by piece to people that have an interest to, first of all, a friend of mine is a fan of that. And he says there's a scene where someone opens a box and looks into it and nobody knows what is in this box. And the idea was to say, okay, if you pay or if you want to give a bid for that, you can see what all others can't see. And to imagine to have films where everybody buys a ticket to see the film, and then afterwards you get the offer to see, you want to see the details you were not able to get as a part of the auditorium, and you pay extra to get the solution to questions. That's, I mean, much of this crypto is about monetarizing things that are currently not monetized. And this idea of using this cut scenes is pretty smart, I think.
That's crazy. One thing I was thinking about is how we all, we hear the stories about just mining, just Bitcoin alone. The mining of Bitcoin, it requires tremendous amounts of electricity, and saying like it's on the scale of like what a small country would use. And how, if a lot of, that's just for Bitcoin, but if a lot of other, if the blockchain is being used for all different types of for all different types of information, like you were saying in the presentation, what will be the energy requirements for all of that?
Very relevant point. So first of all, a system like Bitcoin that offers a backbone permitting that each individual on this world can become part of it, can open a wallet, which is similar for an account on it, without paying a single penny, without KYC. Yes, in the very beginning, yes, it's and that permits that all transactions happening in this network are secured and saved and so on. This is a system that is permitted to require energy. I think that's something we have to make clear. I think we shouldn't compare it to the energy that is consumed by the banks that do transactions in a traditional way, but such a system requires energy. Secondly, the Bitcoin network is the oldest. Tentatively, it's still the most secure system from its architecture and technology. However, it uses extra energy to make it safe. So it has some redundancy implemented to that, because everybody who wants to confirm that a certain transaction is true has to bid for it. And in order to be accepted as a bidder, you have to demonstrate that you paid energy, essentially. That's the way it works in a kind of and this is called the proof of work system. The algorithm in the Bitcoin network is proof of work. Everybody who wants to have a say in this network has to generate or to burn energy just for being credible. Most newer blockchains are built on different algorithms and ideas, mostly known as a proof of stake. Proof of stake does not mean that in order to have a relevant voice in this, it's all digital, but in the end, it's a consensus mechanism. How do we determine which transaction is the right one, which hash value is correct if there are different partners in this network, and who is credible? Bitcoin is going to say the one who has spent the most energy is most likely to have a interest and to be credible in this process. And someone who wants to overturn a decision by a majority of nodes in this network needs to invest even more energy. So that's the proof of work. And proof of stake is a different system which requires, I don't know, 98% less energy. So there are other blockchains that are much more efficient from a energy consumption point of view, that are on the way to deliver the same level of security. This is questioned somehow. And definitely at some point in time, we will have ways to handle this high energy consumption. And then there will be more and more possibilities to trade Bitcoin on another network. So that ultimately the number of transactions that are really written, hard-coded into the base blockchain get fewer, and there are additional layers on this blockchain that will permit transactions that are smaller transactions that have a higher frequency, are not kind of requiring the full security level of the blockchain. But yes, currently there's quite a high level of energy. Nonetheless, the third point, in many cases, the energy that is used to run Bitcoin nodes is taken at places where energy is cheap. And typically you can see that at places where there is superficient energy. So there are water energy, exactly, which are not able to get the entire energy into the network. And then it's quite easy for the operator to say, I use the spare energy, which I can't sell anyway because I don't get it into the network. And El Salvador, for example, say using the volcano energy, which is difficult to get into the network because it's so huge, to just run Bitcoin nodes, and they make money out of it. So that's the smart thing. If you have a place which just needs a GPS and access to the internet, you can just put your Bitcoin nodes everywhere where there is energy. And you don't have to do it in Frankfurt city center with the service of the large banks because they need to be close to a place where the exchange is.
Okay, thank you for that. So it's basically the complexity of the algorithm was done on purpose with Bitcoin to sort of that was by design.
It's part of the system. I would not assume that Satoshi Nakamoto was able to really calculate how much energy would be needed 10 years later, because I mean, it's a system that's growing and growing. Okay.
Let's see, we'll go next to Peter Klaue. If anyone else has a question, please send me on the chat. Go ahead, Peter. Need to unmute. I don't know if he's frozen there.
I hope you can understand.
Okay,
Might be. Do you hear me?
Yes.
We don't hear you, David.
Peter, turn your video off so that you have bandwidth, because we can't hear you.
Isn't it
Peter,
that currently the stage at least?
You could turn your video off, Peter.
You hear me? Okay. I
That's better.
It might be that I'm a little conservative. My question is, currently I still consider Bitcoin a rather speculative object. The question is, I listened to Daniel Stelter, a podcast of an economist in Germany this week, and he mentioned that 97.1% of stakeholders own 1 Bitcoin or less, and the 2.9% of stakeholders hold the rest of those, whatever it is. I think it's 19 million or so. So it's a very, very, very niche, small market. And it goes without saying, if any amongst those 2.9% deems appropriate to go for speculation, it would have an effect.
Yes. No, I mean, there are many aspects. If you just look at Bitcoin and look at it as a financial instrument, which makes this entirely different from what we know and what we've seen in the traditional market. Because first of all, there are players and investors in this market that are not but that can't assumed to behave rational. And in the stock markets, for example, you know that there are huge players holding significant investments that would tend to act in a rational way. And in crypto markets, you have to be aware of the fact that they are called the whales, that there are holders that have huge amounts and that are not regulated, that don't have shareholders or whatever instances that will push them to a certain behavior. And that's one of the risks. And then, of course, there is no anti-manipulation rules in place. So everybody who's interested in trying to figure out if you can manipulate the market has a freedom to do so in the crypto markets. And the volatility which we see, which results in sometimes Bitcoin and other currencies as well, or sometimes even more, just jumping by 10 or 15% in a day, is something that you have to be willing to accept if you are an investor. However, the good thing about all these cryptocurrencies is that they are relatively low, if not at all, correlated with the traditional markets. And if you look at crypto as a new asset class or whatever, which has little correlation to the interest rate bearing market and has little correlation to stock markets, then I think it's worthwhile to consider to attribute a small proportion of a portfolio into this new asset class. And in particular, many people are not fully aware. It's not only about price and realizing gains with crypto. There's more and more this opportunity of earning something like interest with crypto, because you can lend crypto to others. And in the language of the crypto investors, this is called staking. So you provide certain rights that are associated with your crypto holdings to other people, and you get a reward to it, which in many cases is something in the bracket from 5 to 7% a year, which is significantly higher than any kind of interest you can currently get on a normal investment. And from that point of view, yes, the volatility is high. Yes, there are certain attributes you are not aware of, but this doesn't necessarily mean that this is not a potential investment, not something where you should put all your money in, but which could be a part of each new portfolio. And I mean, we hear more and more, even institutional investors, much more in the US and in Europe so far, who seriously consider taking part of their earnings or treasury into crypto.
Thank you. I know you mentioned earlier El Salvador. I remember reading that a month or 2 months ago, about the president. I think he was a very young president there. He's about 40 years old, and probably also that's probably why he's embracing the El Salvador accepting cryptocurrencies. now you were saying, I didn't realize that it's because of the volcano situation that they're using it for mining, but they're also the first country to now accept it, right, as a form of payment within the country. Is there I also heard recently that the European Union is finally now open to adopting digital currency by, if I remember correctly, 2026. Is this, or at least looking at it, is that related also to blockchain, or is it completely independent of that?
Yes and no. So both is correct. However, these are pretty different parts of
Yeah.
So El Salvador definitely permitted Bitcoin as a gesetzliches Zahlungsmittel. There is a special term in English which is
Official tender, right?
Official tender, exactly. So people can even pay their taxes using Bitcoin. And I think El Salvador did it. From my point of view, El Salvador does not have its own currency. They are using the US dollar. So what you would see in many other currencies where inflation is very, very high, and they just use Bitcoin as a replacement for that, which might make sense in certain cases, because even though Bitcoin is highly volatile. I think for El Salvador, one of the driving factors is that the proportion of inhabitants not having access to a bank account is 60-something%. And that's one of the significant impacts we'll see in the developing world, that cryptocurrencies permit that all the unbanked, these people that don't have access to a bank account, have the opportunity, as long as they have a mobile phone and get access to the internet, not regularly. It's sufficient to just once a week be able to connect your phone to the internet, and you can be holder of a wallet, and you can receive value and NFTs and so on, which is yours, and you can transfer it to other people, which I believe, and we just have seen a presentation of new blockchain projects all for the African continent. This is crazy what's going to happen there. And I strongly believe that future generation in Africa, if all this works, they will never need a proper bank account anymore, because they grew up with something where they not have only their contacts and their friends and so on, but they have all their valuables on their mobile phone stored in a wallet. So this is using Bitcoin or other cryptocurrencies, and all these cryptocurrencies have in common that they are not issued by a central bank, and that they are not backed by a government or a governmental institution. And interestingly, when I started to think about Bitcoin, I approached the German regulator, the BaFin, back in 2014, because I wanted to set up an investment vehicle for cryptocurrencies. And the only department within BaFin that had heard about it was the anti-money laundering department. And they said, okay, you know, we are an open state, you can apply for anything you like, but we will find ways to permit that you set up an investment vehicle for cryptocurrencies in Germany. So they were not amused at that point in time. And more the central banks have realized that there are certain advantages of a digital transfer of value. And if they don't manage to permit that a digital euro can be transferred, can be settled within seconds worldwide, then Bitcoin or the other unregulated cryptocurrencies will take over at some point in time. Saying that, we have to bear in mind that the underlying idea of Satoshi Nakamoto when creating the Bitcoin was get rid of the banks. Create something which will not require a bank as a trusted party. And therefore, all these people that believe in Bitcoin as a philosophy or as a new system would definitely say, come on, the digital euro, even if it comes, will still be a central bank backed currency, and it will run on servers that are government owned, and only because it's digital, and maybe they use a ledger technology which has kind of some aspects of decentralization, maybe private blockchain or something like that. This is not the real thing. And therefore, I think we will see both, and we should never mix them up, because the underlying idea of Bitcoin and these other cryptocurrencies is really, it's a system that is not linked to a central bank and a government, whereas all the CBDC, the central bank digital currencies, are ideas that have developed on the basis of the traditional banking system and logic and so on. And one of the aspects Satoshi Nakamoto had in mind, because at that particular time in 2009, banks would more and more just print new money. And he was scared of deflationary developments due to the fact that the amount of money that central banks could print as new currencies is unlimited. And therefore, part of the Bitcoin algorithm is that no one can just create new money out of the sky, and the total number of Bitcoin that will ever be around is restricted to 21 million. And I mean, this is a difference between something in the past. We tentatively were a little bit reluctant about digitalization, electronic processes, and would prefer a system which is run electronically, but where it's a human being that can switch it off and can correct it and so on. And more, Bitcoin is a system where there is no human being. And if you lose your password, there is no 0800 number you can dial in, or there is no email address you could say, oh, sorry, could you please reset my password? You really have to trust in this digital system. And what we see more and more is, I didn't touch on the smart contracts. So smart contracts are algorithms that are written on the blockchain, and they act like they automatically generate transactions. And we recently had this discussion that currently we always have human beings, and we have documents that confirm something, and then transactions are taking place. And the blockchain offers a system where a cargo, where a container just has a sensor on it with a GPS signal, and the very moment the sensor on the container recognizes that it has arrived in Singapore, and the sensor says it has never been opened, and the average temperature within the container has never exceeded, don't know. And then this sensor will automatically generate the payment, and it can't be stopped by a human being to say, no, we are getting more and more into a world where people tend to trust the electronic more than human beings. I don't know if it's good, but the trend is there, and now blockchain provides the underlying technology to make it happen. And that's smart.
Morris, thanks so much for giving this the enlightening side of blockchain technology, and also for telling us about your company coinIX. I just have one final question to ask you. For somebody who wants to step into cryptocurrencies, what's the easiest way to purchase? I saw that you were lucky enough to get that quarter of a Bitcoin back in 2013 on eBay. What's the easiest way to buy these days? And also, isn't there something? Is there a threshold after like 600? I read 600 euro profit, then you have to pay tax in Germany. Can you maybe touch on these points?
Yes, I might even give you. Let me share the screen once again, because I think I have a slide which kind of addresses this thing. What I say there is that volatility is high. We have days where you have 16% up. Performance is high as well. this is something that's quite interesting, because many people that tend to say that's so risky and there's no real value adapted to that moved to saying to turn around. And this is essentially, sorry, that's German language, but this is an overview of how one could start investing into crypto. The first line is explaining what I recommend. It's do it yourself, do it directly, however, do it with small amounts, only to get familiar to that. What I recommend is load on your phone one of these wallet providers, be it coinIX, Jax, Electrum, or whatever. For most of them, they have a functionality where you can use your credit card to pay with euro or US dollar, and then you get a small amount of, I would currently recommend using Ethereum because it's currently faster, whereas Bitcoin usually takes a little bit longer for transactions. And do this within your family, with friends. Sit together, everybody loads down this wallet, one just pays 10 euro or whatsoever, and then you can transfer to each other, to one other's wallet using the QR code, seeing how this new world works. That's what I would recommend to everybody. I would not recommend doing this with higher amounts if you are not really into these IT things, because many things can go wrong. And if you have lost the seed phrase, so the secure code to restore your wallet, it's gone. So you can't, if you don't do it properly, then it's gone. Then if you think about larger amounts invested in Bitcoin or so on, there are external custodians that provide you with a solution for that. It comes at a cost, so it's not recommended for amounts of less than 100,000 euro and tentatively even more. The good thing is, if you hold Bitcoin or crypto directly, you would usually have in Germany, if you're not taxable in the US, the advantage of all capital gains being not taxable if you have held the asset for more than 1 year. This might change sometime. In Austria, it was the same. They are intending to change it. Currently in Germany, if you hold crypto directly, not indirectly via financial instrument, capital gains are not taxable if you had a holding period of more than 1 year. Then we have a few products that are exchange trade notes, or ETC, ETP, exchange traded products, which are not a direct investment, but which replicate the price of certain crypto. You can't get the entire range of it. Fontobel, for example, is one of the providers. They have a relatively high cost attached to it of something 2.5–3%. However, if you make 50%, you don't care about that in more detail. We currently don't have mutual funds investing into crypto because it's currently not permitted. We have a few mutual funds that use ETCs themselves for part of the portfolios. Then we have these alternative investment funds. These are investment vehicles that are open to professional investors only. Usually the minimum investment is something between 100K and 250K. And there's a few names. Blockwall is Düsseldorf-based. Postera is in Munich. CVVC is a Swiss-based company which do crypto investments. Sometimes they do blockchain project investments as well, or invest in companies. And then you have this Blockchain Beteiligungsgesellschaft. Currently there are 4 of us. coinIX belongs to this group as well. So these have the advantage that you can just buy shares on the stock exchange. It has an ISIN, so you can easily buy it. The money you invest into such a share is used to make investments that are related to blockchain. However, you don't know in advance what exactly they're going to do. And then it's not a direct investment. So the share price can make different movements than the price of the underlying. But that's what we do with this coinIX company. So if you want to get an exposure to crypto, and this is not an investment advice, I would advise you do a small amount by your own to get used to it. If you want to have it as a long-term investment, consider using a custodian, and there are certain places. So Bison is an app which is issued by Börse Stuttgart, for example. I think that's quite secure, and do a direct investment. And if you are interested in seeing what else is there, I mentioned this project, the graph, and we are currently seeing every second day new investment opportunities in projects. And I could fill an evening as well with just giving you a flavor of these different projects that try to apply blockchain in very, very, very different areas, be it building a platform in Africa for the unbanked, be it building a platform in Israel to have tokenized phantom stock for new tech companies that are not yet listed, and you get a listing of tokenized stock, be it that you can buy part of real estate in a tokenized format, be it someone who wants to revolutionize social media, because different from what you get on Facebook, where you just click on like and the recipient says, okay, I got a like. Instead of that, you get a token, which has in the beginning a small value attached to it, but you get something you can exchange what used to be a like, for example. And so there are lots of projects, and I tend to compare the status where we are using crypto with the 1989, I remember, because someone told me that he just had bought Amazon shares. And I asked him, so what's this about? And he told me, well, they're building a bookshop, which is only accessible online. I said, okay, guy, no, that won't be happen, and good luck with that. And because I couldn't imagine that this would work back in 98. And when I see some of these new projects that feel that they will use blockchain to make good and to become famous, I feel similar, and I want to avoid that situation to say I can't imagine that there will be a bookstore on the internet, and therefore I'm avoiding to invest. But I feel similar, and we quite often see cases where we internally discuss and say, well, it's possible, don't know. We believe that the future is bright for this blockchain-based project, that it has an enormous disruptive potential, but how exactly it's going to really have a big breakthrough application is something I don't know.
Well, that's a good note to end on. There's huge potential here, definitely. It's going to go somewhere. We'll have to see where it goes, and maybe we'll have you back at a future time to tell us what the future state is in this area. Thanks so much, Moritz, for coming to the American Club of Hamburg. Thanks to one of our directors, Bjorn Onyebeni, for connecting you and having you with us tonight. Well, next week is Thanksgiving, so everybody stay safe, and look forward to seeing those of you who will be attending our Thanksgiving. Otherwise, see you sometime soon. Thanks a lot. Good evening.
Thanks for having me. Good evening. Tschüss.